Today is July 24th edition of Backroads of Illinois. We were Central Illinois agriculture source, and in the Midwest alongside in Central Illinois agriculture, we're glad you're here. Hopeless to the farm bill, cattle on feed. Low prices as continue with the commodities markets. The farm bill has to be hopeless to going to be passed for this year. It's been stone walls in Washington, D.C. for right now. However, Democrats are having their convention in Chicago on August 23rd throughout 26th in Chicago. Cattle on feed report on last Friday. The cattle placement was 1% down to last month's report on this report from the Department of Agricultural. The CFTC report show was down for this report on last Friday as well. The farm income is lower because of the commodity prices are continuing to be down for right now. However, the commodity prices are currently down $3.99. We were going to have a conversation about the commodities markets with Connor Bridgman from Advanced Trading and Adam Johnson from New York. We check with the world economy and inflation on Backroads of Illinois. Stay tuned on Backroads of Illinois. Today, we were joining with Connor Bridgman from Advanced Trading in Assumption, Illinois. Welcome to the show. How are you once again?
I'm good, Caesar. Thanks for having me back on. Weather's good, so can't complain there. But yeah, I'm doing great.
Let's go to start with our conversation about updating on the crop conditions in central Illinois near Bloomington and Decatur.
Yeah. So I think I don't want to jinx it, and we've got to get through August. And we need a couple more rains, but there is potential for some really big yields in central Illinois, Caesar. A couple guys have started scouting and pulling a couple years, and if we get a good finish, if temperatures don't remain too hot, if we catch a few rains, we have got a chance for some really big corn yields. Um, Beans, it's a little too early to the game. Beans really need that August temperature, August rains to see how they're going to be. But this corn crop, it's got potential to be a monster, Caesar.
How is the pollination?
Pollination, I think fantastic. The only concern we've had with this crop is it went in probably just a little bit later than ideal. We got some planted early, but some of it was, getting planted into May. Most of it was in by May 25th. So I don't even know if it's fair to call that late planting. So then pollination through the month of July, I think if we look back and see, we saw very little high temperatures. Temperature was pretty favorable. And then myself specifically and us in Christian County, the rains that came up with Hurricane Beryl were very timely. And you want to talk about a great rain. It was 3 to 4 inch rain. It came slowly with not a whole lot of big winds or anything like that. It all got soaked up. So, in my opinion, that was $1 million rain. And then we've caught one or two after that. So, I think we'll look back again. We don't know how August is going to be. This crop still needs to have a good finish, but I think we could look back on the month of July and say it was very favorable conditions, and that pollination window was very good, if not ideal.
How is the corn market for the last couple of weeks in Chicago?
Oh, the last couple weeks, it's been a bear Caesar. We've dropped uh just dropped significantly. It's almost amazing to look back, you know, 3 weeks ago to see the levels we're at. These past now just the past 3 days, looking at this week, we've had a night we've had a couple rallies and had a couple up days. And so the story is really going to be with the funds being as short as they are, right? Record short for this time of year. Do we see them get a little nervous, whether it's because of maybe it's political? If we see some export demand come back, we haven't really seen that, or any hiccups in production, will they cover those shorts and we could see a rally? That was the hope of what we're seeing these past 3 days on the corner.
Do you have any concerns about soybean futures for the next couple of months until November?
Absolutely, I have concerns. We're still, um, like I said, we're not sure on yield. Soybeans need a good August to finish strong, but right now, exports are not what we want to see. We really need to see them pick up. So you couple that, let's say the exports maybe don't come until later in harvest. We have some decent yields, and you couple that with some weakness in the corn futures. That's not really a recipe for much of a rally from here. And so, you know, we're about two, right? We're a buck 80 off roughly from the highs we saw back in June. So it's hard to say that we see weakness from here, but we've seen lower prices previously historically, right? 1063, we know we can go much lower. So if we see some type of hiccup in export demand or something that really doesn't make U.S. soybeans attractive, yeah, I think there's a real chance to be concerned. And then the other thing I'll say is getting past harvest. We really need to be thinking about that's, we're not the number one player in soybean production, and we haven't been for a while. Brazil is going to plant their soybeans October, November, December. If we look back at last year, they had some delays in planning, and we saw soybeans run above $14 for briefly. Maybe it was a week to 10 days, and then they got the crop planted. They had some favorable weather, and we saw the soybean price fall off. So I'm going to be very cognizant of that fact. And when we're looking forward to 2025 hedges for soybeans, I think we need to be ready to hedge into that uncertainty of the Brazil soybean harvest and be ready for that. I really think that's when we start looking at seasonality, that's a new thing that we need to be ready to be aggressive, I think, in that November, December, January timeframe.
What is your sources for Brazil's soybean production to China?
Yeah, as far as exports go and what they're shipping to China, right? We know if they have the production, that's where China likes to buy their soybeans first. So, we know that they have a good soybean crop. Maybe it's not great, but we know it's good. And so, just looking forward, that's the question: is how much does China have to come to the table to the United States? We saw this back, if we're drawing correlations to past years, the one that gets brought up is probably 2020 as much as anything, where we saw funds short. The price was significantly weaker going throughout the summer. And then around, in August of 2020, we really saw China step in and buy a bunch of soybeans. And so 2020 was different because that was a COVID year, right? They had to step in. And then also we had the derecho in Iowa that affected the production. But, if I wanted to be a bull in the market, that's what we'd like to see, is that maybe China really steps up to the plate, likes the cheap soybeans, and fills that pipeline and gets some demand back for the United States. But if the Brazil crop's there and that satisfies it, right, that's going to be where they go first.
How about the wheat markets?
Wow, what you want to talk about volatility? Holy crap. We saw potential issues with how Russian wheat harvest was going to go and how that Russian wheat crop was. And we saw all three of the wheats rally significantly. Uh, we saw it go north of $7 on Chicago wheat, and then we saw it drift right back down to levels we saw before. And so I think the key takeaway is for the US farmer, there was never any production issues in the wheat market, right? We've always had good to great yields. Coworker Brady Huck is keep me updated in Kansas. They've had good yields. Me locally, right around me is not a big wheat crop area, but south of me is. We've had good wheat yields. The US had that. And so uh, we needed to take advantage of that price spike. And now moving forward, I don't know if the story's over, right? We could still debate what's that Russian wheat crop going to look like. And also the EU, European Union, France, right? They're having some issues harvesting their wheat crop too. So I don't want to be all negative. There's potential that we could see a little bit of a rally, but I think you need to be prepared for the lower prices and be ready to take advantage of those quick spikes that we saw. Make sure we learned from these past 4 months of how fast it can move up and down.
How is the wheat harvest in down southern Illinois, Kansas? And what is the test weight?
I can't speak directly to, especially in Kansas, what test weights were, or even really, I can't remember test weights off the top of my head, but yield, right? Southern Illinois, I heard some really big, in the 90, 100 bushel, north of 100 bushel yields. Very, very good wheat crop. And the other thing, Southern Illinois is if we're growing wheat, we're definitely double cropping soybeans behind it. The wheat harvest, it came early, and we were able to get that second soybean crop in at an early time. So the hope is, right, if we marketed our wheat, if we marketed our wheat well, we got a good price, good yields, and then here's the hope is that if we have some good double crop soybeans, those acres could really be profitable if we did the right thing. So that's the hope is that we see some nice double crop soybean yields.
Can you tell our audience about the dirt show in central Illinois near Bloomington and Champaign County?
Yeah, sure. That a big fear you and I were talking before the show about the potential nasty weather around you and then around McLean County and Champaign County. It all went right. Assumption, Illinois is south of those. We never saw the adverse weather per se, not anything like that. And so that was the fear. Are we going to see another derecho like we saw in Iowa? In my opinion, we didn't see even close to amount of the damage that we saw in 2020. And in terms of widespread damage, I really don't think there was very much. Obviously, there's going to be isolated spots, but generally speaking, I think we welcome the rain and the crop's going to be okay. Champaign County, especially, I think we could see that's good dirt. They've had good rains. We could see some big yields out of Champaign County, I think, Caesar.
What's going on with the livestock markets in today's close?
Yeah, we're down. Feeders are down a little bit across the board, same other than nearby live cattle. And so, uh, we got August feeders down a buck 60 roughly. And so just checking in on that chart, kind of really chopping around. We're still historically semi-elevated. I if you're a cattleman that's also farming, if we don't really like the corn price, I think we really need to take a look on how we can protect um, this current cattle market and the deferred, right? My coworker Brady Huck's great at weighing the options between um, hedging it ourselves or using the LRP, the livestock risk protection. But I still think it's a market that you need to be proactive in, at least for the nearby, right? We still prices are decently elevated off the highs that we saw through March, April, and we put in the low April 12th, rallied, and very much we've chopped around. The high we've seen is a little bit north of 260, and then on the low end 248. So kind of a range bound market this past couple of months, but I think it's one you want to be proactive in still.
Do you have any final thoughts on this growing season in central Illinois?
Yeah, the potential is there, and if we keep the status quo going forward, we've got potential for big yields in central Illinois and I think across the Midwest, right? The only true hiccups I've heard is maybe the areas in parts of Iowa and Minnesota that got way too much rain. And so to me, if that's the only concern, we need to be ready for the scenario of bigger yields going forward. And then let's couple that with on-farm stocks are the biggest we've seen in over 30 years that the farmer owns way more of the 23 crop than they have in previous years. We're not running out of grain anytime soon. And so when we put together a marketing plan, number one, we've got to be ready for for a bigger carry market than we've seen in the past couple years and make sure, if we're sticking grain in the bin, we're cognizant of those carries and we know how to take advantage of those. On the flip side, um, interest rates, maybe they'll come down at the end of the year. I hope they do, but they're still going to be a little bit elevated. So I think managing grain, managing the cost of money is going to be big. And so harvest is going to start for us. It's crazy to say, but we're 45, 60 days out from harvest here in the US. And so I think we got to be ready if we have big yields. I don't know a single farmer that likes the price of corn, soybeans, even wheat, right? But definitely not corn and soybean price. But if we know we've got to move some, whether it's for cash flow or we don't have the space to store this crop, we need to start making those plans now. And so that's really been my focus as a broker is making sure we're ready for that. We're avoiding any unnecessary fees, whether that's storage charges or interest costs, right? I'd rather get 4 or 5 than pay 8. And so if we're ready for that, right, let's hope for higher prices. I hope they come, but we need to be ready for a bigger crop, bigger carryouts, and ready to manage those type of markets. So that's really my hammering point right now. And then also, if we don't like the price right now, we don't like our marketing plan. Let's start peaking at 2025. Right now, it's sitting at 457. That's the level that's probably worth at least having the discussion of should we defend that and where do we start feathering in hedges for that 2025 crop.
Thanks, Connor.
Yeah. Thank you, Caesar. Thanks for having me.
This is Connor Bridgman from Advanced Trading One Back Roads of Illinois. And welcome back to the show. Otherwise, we were talking about the economy and inflation for right now. However, we're having a discussion about it with Adam Johnson from Bullseye in New York City. Welcome to the show. How are you today, Adam?
Oh, thank you, Caesar. I'm very happy to be with you. And I'm doing well. I think there's a lot more to like in this economy and the stock market than not to like. So I'm fully invested. The world is imperfect, but we all know that. So We make our best decisions and we go forth every day. And yeah, I'm happy with where we are and where we're going.
Let's start with our conversation about updating from Federal Reserve with the interest rate.
Yeah. So, it's amazing what has happened over the past 3 to 4 weeks, Caesar. We went from sort of thinking, well, there are probably not going to be any interest rate cuts this year to suddenly there's absolutely going to be one in September. And there's going to be another one in November. At least that's what the Fed funds futures market suggests. And by the way, there might even be a third in December. Let's not get ahead of ourselves. But that's just the pivot that has happened over the past several weeks. And it's because inflation has continued to come down, number one. And number two, because unemployment has actually ticked up. And while you hate to see people lose their jobs, the fact is the labor market was very tight and wage inflation was very real. And that had a lot to do with why inflation as a whole was going up. So if you just sort of take the temperature down on the labor market a little bit, the unemployment rate goes to maybe 4.2 or 4.3%, 4.3%. You hope it doesn't go any higher. Right now it's at 4.1. That eases the upward pressure on wages, which helps lower inflation, and all that's good. That justifies rates. Meanwhile, we still have an economy growing 2%, which is solid but not too hot. So that's good. And we have earnings growth of what I think will ultimately prove to be 10% this quarter, and that's very good. So again, it's not a perfect scenario, but there's a lot more.
What is the cut rate for right now?
Well, inflation right now is running at about 2.7% if you average all of the indicators of inflation: consumer prices, producer prices, the PCE, personal consumption expenditures, and then finally the GDP price index. Right now, they range anywhere from about 2.4 to 3.1. If you average them all together, it's 2.7%. The target is 2%. And so, some people may listen to that and say, oh gosh, well, 2.7, that's not two. They can't cut rates. Yes, but inflation was as high as 9 to 11%. So it's come way, way down.
Admin, what happened with the oils markets from the campaign trail?
So oil has been all over the map, as we know, because you and I and probably a number of our viewers look at the futures market every day. But an interesting thing happened to the oil market when President Trump suddenly went up in the ratings, and when it looked like he was more likely to win. And that is because Mr. Trump wants to go back to the policies that were very much a part of his presidency, which was, as they like to say on Wall Street, drill, baby, drill. What happened was he said, drill, baby, drill. You can drill anywhere you like. And then Mr. Biden came in and reversed all that because Mr. Biden had to make a deal with the far left side of the Democratic Party, which wants to further a green agenda. They want to move away from fossil fuels. So Mr. Biden basically put restrictions on drilling on federal land. The problem with that, Caesar, is that a lot of the cheapest, easiest oil to get to is on federal land. So by restricting drilling on federal land, they took out all the low-cost basis oil, and that pushed the price of oil up. So by contrast, you bring in Donald Trump as president, and all that gets reversed. You can drill anywhere you want. And so watch oil as kind of an interesting tell or indicator as to how Mr. Trump is doing. If the market perceives a Trump victory, oil tends to go down. If the market perceives a Democrat victory, no longer Biden, but now Harris, then oil will go up. I know that there are more factors affecting oil than just U.S. politics, like what's happening in Ukraine and Venezuela and Iran, et cetera. But that's certainly one thing for all of us to watch.
What is the prices for right now with baby drill?
Yeah, well, I think that if we get drill baby drill back, I should say get Mr. Drill Baby Drill back into the White House. I think you could probably see oil go down to um, the mid 70s, from the mid 80s, maybe even the low 70s. And if there were actually peace in the Middle East, don't hold your breath, or in Ukraine, you'd probably take another $5 or $10 out of the price of oil. That would put it into the low 60s. So that would be hugely beneficial to our economy because oil touches everyone from farmers who've got to power their tractors to, people that need to fly or want to fly and, would bring down airfares to just, driving cars to gas powered plants that produce stuff in factories around the country. So bringing the price of oil down 20% would be hugely deflationary, which would be good. You bring inflation down, you would also stoke growth as a result. That would be very positive. So if we get drill baby drill, I see oil probably going into the low 70s. And if we get peace in the Middle East, you probably get it down into the 60s. Right now, oil's in the 80s.
Serious note that President Joe Biden made his plans for the future. What will does the bonds markets until November?
Yeah, so the bond market has really been struggling with how to interpret a Trump victory versus a now Harris. We can't say Biden anymore, I guess, but a Harris victory. And here's why. Um, the market is struggling with who's more inflationary. I think it's probably the Democrats because Democrats tend to spend. And if you have spending, you have, which is what we've had over the past 4 years. We've had the biggest deficits since COVID and World War II under President Biden. So when you have deficit spending, you have inflation, therefore you have higher bond yields. But there's also a theory that because Mr. Trump wants to bring back tariffs on China and introduce tariffs on Mexico, that would raise prices, and that too would be inflationary. So it's possible, Caesar, that no matter who wins, there is some inflationary pressure. But I would counter that by also saying that if Trump wins, we get more drilling, so that's cheaper oil prices. We probably also get tax cuts, and while that could stimulate more spending, in theory, we're going to get less government spending. So there are a lot of moving parts here, and I think the market's struggling with how to interpret all these different it's like a tug of war right now. Maybe 21 times. So the current PE ratio of 22, it's a little expensive. That'll be okay if earnings continue to grow. But if earnings don't continue to grow, then we got a problem, which may be one of the reasons why over the past couple of days, markets have been very volatile and kind of trading to the downside. All of a sudden, people are saying, wait a minute, have we gotten ahead of ourselves? And again, as long as earnings continue to grow, no, we have not gotten ahead of ourselves. And I am generally of that view. But, it's something that, we all need to watch.
Is there anything would you like to talk to our listeners about this growing? Any concerns about world events?
Well, there's been, in terms of world events, what's fascinating about the US stock market is that whenever you get dislocations around the world, like, for example, if you get a military event, when the invasion of Ukraine began, when Houthi rebels struck tankers in the Red Sea, 9/11, the bombing of the USS Cole in the Arabian Gulf. In other words, these hostile events, when they happen, you typically get a 5% correction very quickly, like within 24 hours. But interestingly, over the next week, the markets are back where they were. Something else I've observed, Caesar, is just bringing it back to the U.S. stock market. We have had so far this year 6 corrections of anywhere from 5 to 8% in the NASDAQ. Well, those corrections happen very quickly, but guess what? 2 weeks later, stocks were pretty much back to where they were. So whether you're talking about world events and shocks to the system, or whether you're talking about just volatility in the market, the U.S. stock market is incredibly resilient. So what I would suggest people do is, if they get stressed out by volatility, or if they're feeling uneasy, you can always have a little bit of money sitting on the side. And when you get those 5, 6, 7% corrections, go out and buy and put it to work, because you tend to get rebounds.
It rained on us.
You made a good point in the stock. Do you have any final thoughts?
Well, my final thought, Caesar, would be stay balanced. I am long large companies. I'm long artificial intelligence. I'm long, the Magnificent Seven. I'm also long small caps. And for a couple of years, those small caps have done nothing. They're finally starting to percolate on talk of falling rates. And then I'm long some just basic companies kind of in the middle. 3M, Chubb, the largest property and casualty insurance company, Blackstone for exposure to private equity and capital markets. So I think balance is the operative word. Own some big stuff, own some small stuff, own some good solid companies. It's okay to own some risky ones too. Just stay balanced. And I think that's the way forward. It really is.
Thank you very much.
Oh, thank you, Caesar. It's always fun to be with you. I enjoy talking with you, and I'm so thankful that you have me on your podcast so that I get to reach your viewers and listeners as well. Thank you.
That's Adam Johnson from Bullseye. And welcome back to the show for this afternoon. The state capital of Illinois is debate on dicamba situation in Illinois. Some farmers are concerned about the legislation from the state capital. Dicamba has a drift issue to another soybean plants. I had a conversation with Dr. Aaron Hanger from the University of Illinois.
We did have someone the other day ask about observations that we've made this year with respect to herbicide drift, and in particular, off-target exposure of soybean to dicamba. Again, that has happened again this year. As we've said many, many times before, it's hard to find a species more sensitive to dicamba than is sensitive or non-transformed soybean. It just takes a very, very minimal amount of dicamba to cause an observable phenotypic response, which typically includes leaf cupping. We don't expect it, or we haven't really seen it as widespread as we had in previous years, especially as 2019 was probably one of the worst years that we had to see this damage on sensitive soybean. It still happens. It's happened virtually every year that dicamba has been in the marketplace, starting in the late 1960s or early 1970s. The application deadline that I think that was imposed by the Illinois Department of Agriculture and the temperature restriction on the labels of the soybean products, I think has been very helpful in reducing the off-target instances, because again, as we've said again many, many times, that volatility is a chemical process, and We simply cannot label or write a label statement that's going to eliminate volatility in all instances. Volatility tends to be driven by temperature, and so at higher temperatures, the likelihood of a product like a dicamba increases. So by having those temperature restrictions on there by these earlier application deadlines, I think that's probably been a very, very good move. As many of your listeners are probably aware, the Circuit Court in Arizona vacated the labels, the three herbicides labeled for post or for use in dicamba soybean. Earlier here in 2024, two of the registrants have applied or petitioned EPA for new labels. So these dicamba products can be used again in dicamba resistant soybean. But it's very uncertain right now whether the agency will grant those labels again as we move forward out of the 2024 growing season. So a lot of uncertainty about what the dicamba soybean situation would look like in 2025.
Dr. Hanger, do you have any concerns about the dicamba situation and the legislation in Springfield?
Yes, we do actually. We've seen instances now in at least two legislative sessions where bills have been introduced, very specific bills to prohibit the use of dicamba across the entire state of Illinois, and not just its use in soybean or corn. Both times those bills, I don't believe they moved out of committee either time. We anticipate that they will be reintroduced again in the future. A lot of the public concern about off-target herbicide movement is not necessarily damage to sensitive soybean, but rather damage to other species, plant species in the landscape. And in particular, many species of trees have shown instances of damage from off-target herbicide movement, probably much more so frequently than since 2017, since dicamba technology was brought into soybean. These are going to have to be continued to things that we're going to have to continue to watch and monitor. I've said many, many times before, we can grow soybean in Illinois without the use of dicamba. But because of the evolving resistance situations that we see to many of our corn herbicides, we will need dicamba used in corn much more frequently moving forward. And so it's going to be a herbicide that will have increasing importance for us in corn. And so we really.
This time is for your commodity markets update minute on back roads of Illinois. Corn futures finished in up 3 to 6 cents. Soybean futures finished in up 10 to 9 cents. Wheat futures finished in up 8 to 7 cents. Now that we are going to talk about the livestock market for today on this afternoon. Cattle futures finished in down 2 to 3 cents. Feeder cattle finished in up 10 to 9 cents. Lean hogs finished in up 3 to 5 cents. Texas crude oil finished in up 8 to 7 cents per barrel. Dow Jones finished in up 8 points. Thanks to Connor Bridgman from Advanced Trading and Adam Johnson from Bullseye in New York. We're running out for today's program. Remember that you can listen to our show on YouTube and whenever you get your podcast. This has been Back Roads of Illinois with Cesar Delgado. Have a good day.